This is a look at some of the important macroeconomic metrics going into 2024. The tech sector through 2023 remained strong. We did a look at the economic metrics for the tech sector. We did one in March and we did one in December of 2023. We feel that the technology productivity factor is a key element to the economy of 2024. Early in 2023, we looked back at the graphs of the three main markets, the Dow, the S&P, and the NASDAQ, to review the growth patterns involved. On the small scale and the large scale, tech seems to lead the markets. The leaders in the tech market, outperforming all others, are the Magnificent Seven. This is typically due to some monopolizing of a tech platform that they can leverage for growth. We looked at the PE ratios for both the S&P and for tech. We also compared these with the U.S. Treasury yields for the 2-year. The multiples are high, and in tech, which is a riskier stock, it also has higher yields because of the potential. This has to be weighed in when looking at individual stocks and the different markets. When we looked at the tech's productivity factor on a historical basis, we realized that tech productivity may be the underlying current to a market resurgence in 2024. The Consumer Price Index, the CPI, after being flat in the 2020s, has now increased over the last year and is currently at 3.7%. The PPI has settled down, but this doesn't include rents, which take about 6% of a consumer's budget. Due to the fact that the Fed has raised rates in 2023, the mortgage rates for the average consumer have gone up substantially. This has made it hard for consumers to buy houses and for businesses to get loans. The unemployment rate has remained low, which is good for workers, at 3.7%. Unfortunately, the amount of people who have attained to jobs and is at the highest level that it's been in decades. There also is a large number of homeless in many cities in our nation. These disenfranchised people are part of the general economy and need a hand up. In summary, despite the differing economic metrics, we feel in the equity markets that the underlying current of increased production in technology will make this year good for the equity markets. In technology, there has to be adoption, integration, and education. And these factors are increased due to the use of technology for convenience and the increased tech production from tools like AI.